If you've been watching the headlines this week, you've seen the victory laps. The U.S. Navy, in coordination with British intelligence, seized the Marinera, formerly the Bella 1, a Russian-flagged tanker in the North Atlantic. The State Department is calling it a triumph of international law, a decisive blow against the axis of evasion linking Moscow, Tehran, and Caracas. They're telling you this is about justice. They're telling you this is about stopping a rogue state from funding its war machine. They are lying to you. Or, at the very least, they are selling you the theatrical version of a much colder, much uglier reality. Turn off the press conference. Ignore the moral grandstanding about rules-based order. If you want to understand why the United States just committed an act that, in any other century, would be an immediate declaration of war, you need to look at something far more boring than a naval blockade. You need to look at the spread on heavy, sour crude futures. This wasn't a police action. This was a margin call. What happened in the North Atlantic wasn't about stopping oil, it was about pricing it. We are witnessing the weaponization of maritime insurance and the desperate final flailing of a financial system that is losing control of the world's most critical commodity. The Marinera seizure is not the beginning of a crackdown. It is the bell toll for the era of free trade on the high seas. Here is the reality the news won't touch. The global energy market has bifurcated. There is the white market, insured by London, paid in dollars, tracked by satellites. And there is the shadow market, insured by nobody, paid in yuan or dirhams, and moving nearly 4 million barrels of oil a day right under the nose of the G7. The U.S. didn't seize that ship to stop the oil. They seized it to terrify the insurers. But as we are about to discuss, this strategy isn't just failing, it's backfiring. We are accelerating the very thing we are trying to destroy. You are watching a spectacle, but the real war is happening on the balance sheet, and you are the one who's going to pay the collateral damage. Let's connect the dots. To understand why a rusty hull in the North Atlantic matters to your retirement portfolio, we have to go back to the numbers. Capital doesn't care about flags, it cares about volume. Since the G7 imposed the $60 price cap on Russian oil back in late 2022, the market didn't stop, it just went underground. We created the incentive for the largest ghost fleet in maritime history. We are talking about approximately 600 to 800 vessels, nearly 15% of the global tanker tonnage, that have effectively exited the Western financial system. Let's look at the trade volumes. In 2021, Europe was the primary buyer of Russian Urals crude. Today, that oil goes to India and China. But here is the kicker. India isn't just burning that oil. They are refining it. They take Russian crude, turn it into diesel and jet fuel, and sell it back to Europe and the United States at a premium. Do you see the absurdity? We sanction the crude, but we buy the product. It's a laundering operation on a planetary scale. The Marinera, the ship that was just seized, is a perfect case study of this shadow fleet. It changes names like a con artist changes coats. It was the Bella 1 Naus. Before that, it had other names, other flags. It turns off its AIS transponder, the dark tactic, or it spoofs its location, making it look like it's anchored in the Aegean Sea when it's actually loading at a terminal in Primorsk or Ust-Luga. But the history here is critical. Why does this fleet exist? Because of the P&I clubs. That stands for Protection and Indemnity. About 90% of the world's ocean-going cargo is insured by a handful of clubs based in London, New York, and Europe. The sanctions were designed to weaponize this monopoly. The theory was simple. You can't ship oil if you can't get insurance, and you can't get insurance unless you promise to sell the oil for under $60. It was a clever lawyer's trick, but it ignored the fundamental rule of economics. If the profit margin is high enough, the market will build its own infrastructure. And that is exactly what happened. Russia, heavily assisted by intermediaries in Dubai and Hong Kong, spent billions buying up old tankers that were destined for the scrapyard. These are ships that are 15, 20 years old. In the normal world, they are liabilities. In the shadow world, they are gold mines. A tanker that would normally cost $20 million was selling for $40 or $50 million in cash. Why? Because a single trip from the Baltic to India can net $10 million in profit if you are bypassing the sanctions. Do the math. You pay off the ship in 4 trips. After that, it's pure, unadulterated profit. The U.S. Treasury thought they could strangle Russia's revenue. Instead, they created a high-risk, high-reward black market where the operators are making more money than they were before. The Marinera wasn't just carrying oil, it was carrying the proof that the Western financial blockade is leaking. This brings us to the Venezuelan connection mentioned in the headlines. The administration is claiming this ship was violating the Venezuelan blockade. This is a convenient narrative because it lumps Russia and Venezuela together. Two birds, one stone. But look at the data. Venezuela produces heavy sour crude. Keep that term in your head. Heavy, sour. The global refining system is not universal. You cannot put diesel in a gasoline engine, and you cannot put heavy Venezuelan or Russian sludge into a refinery built for light Texas shale oil. This is the great irony of American energy independence. We pump more oil than anyone else, but it's the wrong kind of oil for many of our own refineries. We need the heavy stuff. So, we have a situation where the U.S. is seizing the very resource its own industrial base is starving for, all to maintain the illusion of political control. The seizure of the Marinera isn't an isolated police raid. It is a desperate attempt to regain leverage over a fleet that has gone rogue. The West has lost the ability to track the money, so now they have to physically board the ships. That is not a sign of strength. That is a sign that the soft power of the dollar is failing, and we are reverting to the hard power of the cannon. Let's strip away the politics and look at the mechanics. How does this shadow fleet actually work, and why is stopping it nearly impossible? First, you have to understand the shell game. A legitimate tanker is easy to track. It has a known owner, usually a public company or a major Greek magnate. It has insurance from a London firm. It has a flag from a country like Liberia or Panama that actually enforces safety standards. The shadow fleet operates in a parallel universe. The Marinera likely isn't owned by a person you can sue. It's owned by a shell company registered in the Seychelles, which is owned by a holding company in Hong Kong, which is managed by a trust in Dubai. If you sue the owner, you are suing a P.O. box. When the U.S. seized this ship, they didn't just file paperwork. They had to play a game of maritime cat and mouse. These ships engage in what's called STS, ship-to-ship transfers. Picture this. A Russian tanker leaves a port in the Baltic. It's carrying sanctioned oil. It sails to a patch of international waters off the coast of Greece, or maybe the Azores. There, it meets another tanker, the whitewashing vessel. They turn off their transponders. In the dead of night, they hook up hoses and pump millions of dollars of crude from one hull to the other. The second ship then turns its transponder back on. Suddenly, it has a cargo of oil. But where is it from? The paperwork says Kazakhstan or blended crude. The origin has been erased. This oil is then sold to a refinery in India or Turkey, refined into diesel, and sold legally to Shell or BP. The mechanism the U.S. used to seize the Marinera is fascinatingly cynical. They used a legal concept called statelessness. Under international maritime law, a ship must fly a flag. If a ship switches flags too often, or if the country whose flag it flies disavows it under pressure from the State Department, the ship becomes stateless. A stateless vessel has no protection. It's fair game for the U.S. Coast Guard or Navy to board. So, the game the U.S. is playing is diplomatic bullying. They pressure the flag registries, places like Cameroon, Cook Islands, or Palau, to strip the registration of these Russian ships. The moment the flag is pulled, the Navy swoops in. But here is the technical glitch in the American plan, the refinery mismatch. I mentioned heavy sour earlier. Let's use a metaphor. Think of light sweet crude, the stuff from Texas, as champagne. It's light, bubbly, easy to refine into gasoline. Think of heavy sour crude from Russia, Venezuela, Iran as molasses. It's thick, full of sulfur. Complex refineries, specifically those on the U.S. Gulf Coast, were built decades ago to process molasses. They invested billions in cokers and crackers to break down that heavy sludge. If you feed champagne into a molasses refinery, you lose money. You can't run it efficiently. The U.S. sanctions have effectively banned the molasses. We have cut off Venezuela, mostly, and Russia. This leaves our refineries desperate for heavy crude. This is why you see the paradox of the U.S. seizing Venezuelan-linked tankers while simultaneously quietly allowing Chevron to pump oil in Venezuela. We are confiscating the competition's supply while begging for our own. The seizure of the Marinera disrupts this delicate mechanical flow. Every time the U.S. takes a tanker off the board, insurance premiums for the shadow fleet spike. You might think, good, that hurts Russia. But think like a trader, not a politician. Who pays that premium? The buyer. India and China don't eat that cost. They negotiate a discount from Russia to cover the risk, or they pass the cost downstream. But as the risk of seizure goes up, the number of ship owners willing to play the game goes down. Supply constricts. When supply constricts, price goes up. So, mechanically, by seizing this ship, the U.S. is creating a supply shock in the heavy oil market. They are trying to break the financial loop of the shadow fleet, but they are inadvertently tightening the screws on the global energy supply chain. They are trying to perform delicate surgery on the global economy with a sledgehammer, and the patient, the global economy, is starting to bleed. The mechanism is breaking. We moved from financial sanctions, clean, digital, remote, to physical interdiction. Messy, dangerous, escalatory. When you have to send a destroyer to do a banker's job, you have already admitted that the bank has lost its power. Here is the twist. Here is the part of the story that should keep you awake at night. The U.S. strategy relies on the assumption that Russia and its buyers need Western insurance and Western ships. The assumption is, if we make it hard enough, they will come back to the table. That assumption is dead wrong. By weaponizing the insurance market and physically seizing ships, the U.S. is forcing the balkanization of global trade. We are pushing Russia, China, and Iran to create a completely parallel maritime ecosystem that is immune to Western sanctions. And they are doing it. Russia has already started offering its own state-backed insurance guarantees. China is doing the same. They are telling ship owners, don't use Lloyd's of London, use the Russian National Reinsurance Company. We will cover you. Right now, that parallel system is clumsy. It's smaller. But every time we seize a ship like the Marinera, we provide the ultimate proof of concept for why that system must exist. We are validating their paranoia. We are proving to Beijing and New Delhi that relying on Western maritime law is a strategic liability. The twist is that the shadow fleet is becoming a permanent institution. It's not a temporary evasion, it's a new industry. And consider the Cobra effect. The British Empire once tried to reduce the cobra population in Delhi by offering a bounty for dead cobras. So the locals started breeding cobras to kill them and collect the money. When the British stopped the program, the breeders released the cobras and the snake population tripled. We are seeing the same thing with these tankers. The higher the risk, the higher the shipping rates. The higher the shipping rates, the more profitable it becomes to run a junk tanker. We are literally paying the shadow fleet to expand. The seizure of the Marinera creates a risk premium. Russian oil now trades at a deeper discount relative to Brent crude because of this risk. Who benefits from that discount? China. China is buying oil at $10, $15, sometimes $20 below the global market price because the West has scared away other buyers. This means the Chinese manufacturing sector, the factories that compete with American factories, is running on discounted energy. Meanwhile, the US and Europe are paying full price plus the inflation premium for energy. Do you see the irony? The sanctions intended to bankrupt Russia are subsidizing the industrial competitiveness of our biggest geopolitical rival, China. We are effectively taxing ourselves to give Beijing a discount. Furthermore, this physical seizure escalates the conflict into dangerous waters. Literally. Russia has already warned that this lowers the threshold for the use of force. If the U.S. Navy can seize a stateless Russian ship, what stops the Iranian Navy from seizing a British tanker in the Strait of Hormuz on environmental grounds? What stops China from boarding a Taiwanese merchant ship claiming it's violating customs regulations? We are tearing up the unspoken agreement of the high seas that commerce flows unimpeded. By normalizing the seizure of merchant vessels as a tool of economic warfare, we are inviting chaos. The twist is that the U.S. thinks it is enforcing the law, but it is actually destroying the law. We are returning to the age of privateers and corsairs. If a Russian tanker is fair game, then everything is fair game. And in a world where supply chains are stretched thin, chaos is expensive. This backfire isn't theoretical. It's happening. The dark fleet isn't shrinking. It's hardening. They are moving away from the dollar entirely, settling trades in yuan and gold. By trying to weaponize the dollar's dominance over maritime trade, we are accelerating the de-dollarization of the oil market. We seized a ship, but we are losing the ocean. So, what does a seized tanker in the North Atlantic have to do with you? You're not an oil trader. You don't own a shipping company. Why should you care? You should care because the cost of this shadow war is being passed directly to you, hidden inside the price of everything you buy. Let's talk about gas prices. When the U.S. restricts the flow of heavy crude, whether by seizing Venezuelan tankers or sanctioning Russian ones, refineries in the U.S. become less efficient. When refineries are less efficient, they produce less gas and diesel. When supply drops, prices rise at the pump. But it's worse than just paying an extra 50 cents for a gallon of unleaded. Diesel is the blood of the economy. Everything you eat, wear, or use was transported by a truck or a train powered by diesel. When the global shadow fleet creates friction in the oil market, diesel prices stay stubbornly high. This is why inflation feels sticky. The Fed can raise interest rates all they want. They can crush the housing market. They can make your credit card debt more expensive. But the Fed cannot print oil. They cannot lower the price of shipping containers. If the cost of shipping energy stays high because we have fragmented the global ocean into safe zones and seizure zones, then the cost of everything stays high. This is the doom factor, structural inflation. We are entering a period where supply shocks are the new normal. Imagine a scenario 6 months from now. Retaliation begins. Maybe Iran closes the Strait of Hormuz for a week. Maybe Russia cuts off the remaining pipeline gas to Europe. Maybe a mysterious accident happens to a Western tanker. In a fragile market, one where the U.S. is actively seizing ships, these small events trigger massive price spikes. You will see it in your utility bills. You will see it in the surcharge on your airline tickets. You will see it in the shrinking size of products at the grocery store. The wealth transfer here is staggering. You are paying for the geopolitical strategies of the State Department with your disposable income. The imperial tax is real. Maintaining a unipolar world order requires enforcement, and enforcement is expensive. And let's look at your savings. The stock market loves stability. It hates uncertainty. The normalization of seizing assets, state-level piracy, introduces a level of uncertainty that markets haven't seen since the 1940s. If global trade routes are no longer secure, the risk premiums on every multinational corporation go up. That hits your 401k. The freedom of navigation has been the bedrock of global prosperity for 80 years. It allowed you to buy cheap electronics and cheap clothes. It allowed the just-in-time supply chain to function. By seizing the marinera, the U.S. is signaling that the era of frictionless trade is over. We are moving into an era of just-in-case supply chains, which are expensive, redundant, and slow. Don't be fooled by the victory lap. When the government cheers about seizing a ship, check your wallet. They just made your life more expensive. They are fighting a 19th century naval war in a 21st century integrated economy, and you are the one covering the spread. We are witnessing the end of an illusion. For decades, we believed that globalization meant that commerce was above conflict. We believed that if nations traded with each other, they wouldn't fight. We believed that the ocean was a neutral common, guaranteed by the benevolent power of the U.S. Navy. That world is gone. It didn't die with a bang. It died with a seizure warrant for a tanker named Marinera. We are returning to a world where trade is trench warfare. The seizure of this vessel is the definitive signal that the global economy is splitting into two hostile blocks. On one side, the G7 trying to enforce rules that no longer fit the reality of power. On the other, the axis of the sanctioned, Russia, China, Iran, Venezuela, building a fortress economy that operates in the shadows, immune to our laws but deeply integrated into our markets. The U.S. has proven it has the power to seize a ship, but in doing so, it has admitted it lacks the power to control the market. In the next 6 to 12 months, expect escalation. Russia will not just take this lying down. Watch the gray zone. Watch for unexplained cable cuts in the Atlantic. Watch for cyber attacks on Western logistics hubs. Watch for the sudden detention of Western assets in friendly ports. The message from Washington is, we are in control. The reality is that control is slipping through their fingers like crude oil. We are entering the age of corsair capitalism. It's a world where the map is drawn not by treaties, but by where your navy can physically protect your cargo. It's a world where neutrality is a myth. So, the next time you see a headline about a seized tanker, don't think about justice. Think about the plumbing of the world breaking apart. The pipes are leaking, the pressure is building, and the people in charge are trying to fix it by hitting it with a hammer. History tells us how that usually ends. It's not with a repair, it's with an explosion. Prepare accordingly.